Good morning, everybody. It's Tuesday, August 27th, 5:25 a.m. Central Time. Grain markets just a little bit lower this morning. December corn futures down 0.75 cents at 385 3/4. November soybeans down 2 1/4 at 978 1/2. December Chicago wheat down 2 3/4 at 522 1/4. December Kansas City wheat down 1.5 at 535 3/4. December spring wheat down 1.5 at 566 1/2. Let's start off with this heat wave.
Extreme heat has settled into the U.S. Corn Belt. A heat dome is bringing scorching temperatures to the area between St. Louis and Chicago today. Heat indices are estimated to climb from 105 to 115 degrees Fahrenheit. Records are expected to be broken across the region. The extreme heat will move into the mid-Atlantic and southeast on Wednesday and Thursday of this week. Last week, the heat wave crushed records across Texas and the Central Plains. Soybean futures were higher on Monday as traders expect the heat wave to damage crops.
Yeah, I can't help but wonder if yesterday's little pop in the soybean market had something to do with this. National Weather Service indicating as much. You've got excessive heat warnings, maximum forecast heat risk in a lot of places. Chicago area south of that, a lot of Illinois, Iowa, it'll be into Indiana later today. Corn sweat is the phrase of the day. Forbes ran an article about this, how the corn crop adds to humidity and that sort of thing. And this is really the kind of weather map that I can get behind here. This is the kind of weather map that a 3-year-old could read. And this is really great stuff put out by WTOL, which is Toledo, I believe. But yeah, it's going to be hot. August weather to this point has been kind of interesting. It's been dry, especially the northern to central part of Iowa, northern Illinois, and then southern Illinois has also been dry so far in August. Northwest Indiana has been dry. And then temperatures, on the other hand, up until this point had been cool, and they're going to average out and probably end up close to normal given these last 3 or 4 days of excessive heat. But I don't know exactly what the weather means. I know that USDA and the crop tour more recently told us that the soybean crop's going to be huge. Do you guys think that this excessive heat changes that? Let me know. Drop something in the YouTube comments this morning.
Grains are cheap relative to other commodities. Compared to other commodities in the Bloomberg Commodity Index, soybean, corn, and wheat contracts have declined to their lowest level since 2010. The decline is due to projected bumper crops. Last week's Pro Farmer Tour forecasted record corn crops in Illinois and Iowa. Lackluster demand is also suppressing prices. On Monday, December corn futures hit their lowest point since 2020. In addition to ample supplies, corn prices have fallen due to continued farmer selling.
I'm not exactly sure what's in the Bloomberg grain sub-index. I'm assuming it's corn, soybeans, wheat. Maybe they throw oats and some other stuff in there. But it makes sense to me that grains would be cheap relative to other commodities because some other commodities have acted better by comparison. Like you look at the cattle market up until recently had acted much better. Precious metals have been much better. Energies have been, I'd say, soft, but not nearly as bad as what we're seeing in the grain markets. So not only are grains cheap, but they're cheap versus other commodities as well, which I suppose is not shocking.
So if you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about yesterday's premium video?
At risk of getting into politics, the number one voting issue for farmers, ? Perhaps it's this stepped up basis proposal that the Democrats have on the table. And if you're not aware of exactly how this will work when it comes to taxation of land that is passed down upon death, essentially, this is a very interesting and I'm not even going to say controversial, because I think if I was a farmer, this would be the number one voting issue for me if I owned any sort of land whatsoever. But in any case, Paul Neiffer was on and he explained the situation. We also talked about some of the other tax implications and policies that are on the table, the unrealized capital gains taxes, that sort of thing. If you guys want to see the premium stuff, we do grain marketing, we do policy, we do news, we do weather, all sorts of interesting stuff every single business day. There's a new video every single business day. Go to standardgrain.com, sign up this morning. It's a $50 per month subscription. You can cancel at any time, no other fee, no other obligation. Nobody will try to sell you anything else, I promise. Give that deal a shot today, guys.
Farmers in Brazil have started to plant their first corn crop for the 24-25 season. According to well-followed private group Ag Rural, as of late last week, 4.2% of the crop had been planted. Last year, during the same week, 7.5% of the crop was planted. Field work is slower this year as farmers are more cautious due to frosts in mid-August. AgRural is forecasting the crop to be 3.5% smaller compared to last season. The reduced forecast is attributed to lower corn prices and concerns over dry conditions caused by La Nina.
The first corn crop in Brazil is not the big deal when it comes to Brazil and corn prices and how the market reacts. It was 27%. The first crop was 27% of total Brazilian production on average 2019 through 2021. It might be slightly lower this year, it might be closer to 20% ballpark. So they had a flood, they had severe flooding in southern Brazil in May. And further north of there, I think they're running some moisture deficits. It's not anything to get worked up about. The market is not going to pay attention to this at all, especially this early. I suppose if you were to fast forward a month and it's still really dry and the forecasts don't look good, maybe people will care. But make no mistake, the bigger issue when it comes to Brazilian corn is that second corn crop that is planted after the soybean crop, which we won't know much about for a long time.
The Indonesian president-elect has proposed increasing palm oil-based biodiesel blending. The proposal would increase blending to 50% by early 2025, up from 35% this year. The B50 blend would consume about 18 million metric tons of crude palm oil, a 64% increase compared to what is currently being consumed. The B50 blend would reduce fuel imports and lower emissions from fossil fuels. Industry experts claim that the higher blend hasn't been tested and won't be ready to be implemented until the end of 2025 at the earliest. Since 2019, Indonesia's palm oil consumption has increased by an average of 7.6% per year, while output has increased by less than 1% per year.
I did have a couple people ask me if this was why soybeans rallied yesterday on this news, and I don't think so, but I'm not going to say no with any degree of certainty. This, I suppose, underscores this global push toward using more vegetable oils for fuel, which is a roundabout positive. We've still got problems in the U.S. as it relates to renewable diesel and that sort of thing with the used cooking oil and all of that stuff that we've talked about at length. But I'm not going to say it's a negative. I'm not going to say somebody didn't buy beans because of this, but I don't know that I would buy beans because of this.
U.S. corn conditions declined last week. The crop was rated 65% good to excellent nationally as of Sunday, compared to 67% the prior week. The rating fell below the trade expectation of 66%, but was the best for the week since 2018. USDA estimates that 11% of the crop is mature nationally versus 5% last week and 6% on average. U.S. soybean conditions were reported at 67% good to excellent nationally versus 68% the previous week. The rating matched the trade expectation of 67% and was the best for the week since 2020. There is a strong likelihood that the rating could see a significant decline next week with this week's extreme heat in the Corn Belt. USDA estimates that 6% of the crop is dropping leaves versus 4% on average.
Ratings are supposed to decline, generally speaking, at this point in this growing season. You get late, crops start to reach maturity, and they don't look as good from the road, and that's basically what crop ratings are. So it's not abnormal to see a little bit of a decline this time of year. The trade had expected a 1% decline in corn ratings. They got a 2% decline, so a little bit bigger than expected. The trade clearly does not care. Corn futures a little bit lower this morning. What about spring wheat?
So the crop was 51% harvested through Sunday versus 31% the prior week and 53% on average. Spring wheat was rated 69% good to excellent nationally versus 73% the prior week and 62% on average. U.S. winter wheat harvest has largely been completed.
I've been told that the quality of the U.S. spring wheat crop in a lot of areas of North Dakota, in particular, has gone backward due to rainfall. Futures market clearly not interested in that story, but it could be a localized issue that impacts basis, local cash markets, that sort of thing.
U.S. corn shipments declined last week. USDA reported that 35 million bushels of corn were inspected for export during the week ending August 22nd. The print was down 26% from the previous week, but up 49% compared to the same week last year. Soybean shipments were reported at 15 million bushels. The print was up 1.4% compared to the prior week and up 26% versus the same week last year. Wheat shipments were reported at 20 million bushels, up 44% from the previous week and up 38% versus the same week last year.
We've only got a few days left in the marketing year for corn and soybeans. We're going to go out on a very strong note with corn shipments. Really not too bad with soybean shipments either. So we're going to hit USDA's targets in all likelihood. The market, as it relates to the export situation, is much more interested in new crop sales and ultimately new crop shipments as we push forward and get into that post-harvest time frame. Cattle were up yesterday.
They sure were. Feeders were up $1.92 to $3.17 higher. Live cattle were up 52 cents to $1.27 higher. Box beef was lower yesterday. Choice ended the day at $315.90. That was down $1.44, and Select ended the day at $300.19. That was down 27 cents.
Cattle opened lower after that cattle on feed report, but bounced
Right.
back pretty fast. So buy the rumor, sell the fact. U.S. dollars about flat this morning. Stocks are just a little bit lower. Bonds are off a little bit. Gold's down $12. Crude oil is down 57 cents in the October WTI. 76.85 last trade. Have a great day, guys. We'll talk to you on Wednesday.